these are not easy times. I mean, in my lifetime, I've not seen something like what we are going through right now. 3-year investors are still in the negative. The people who've invested 3 years back in 2017 are still showing negative returns on their portfolio. Even 10-year returns on many schemes are showing in the range of 7 to 8% returns. Right. Even the long-term story of saying inflation-adjusted returns or double-digit returns isn't working at this point in time. So does it make sense to still trust equities as an asset class? I mean, should we keep at it anymore?
So fantastic question, Poona. And first of all, thank you very much for providing this platform. These are really trying times. And before I answer this question, just want to request everybody to spare a moment to pray for what has happened today in Visakhapatnam. Such a massive tragedy, and let's all pray to God that the tragedy stops as soon as possible. I mean, it's really difficult times in a real sense. I mean, first there is the pandemic across the world. Then a few days back we had terrorist attack on the security forces, and now this gas leakage in Visakhapatnam. I don't know what's happening. So these are really tough times. I don't seem to recollect any such event that you're typically hearing negative things from almost all over. Having said that, does it mean that as investors we take a different approach, stop investing, look at investments differently? So my answer to that is not really. The times will continue to change, the external environment will continue to change, but all of us have a duty towards our families, the well-being of our families, and to that extent certain things are required to be done. Now coming to specific question of 3-year negative returns, 10-year single-digit returns, etc. Has that happened in the past? Where is the long-term story? I'll answer this in two parts. Part one, has it happened in the past? Incidentally, in spite of all these problems, the reaction of equity markets is really surprising in the sense that from the January highs to the March bottoms, Sensex fell by little more than 30%. I think it was 32 or 33%. And that 30% fall happened in a very short span of 64 days. So somebody may say a 30% massive fall in such a short period. So it was the 7th time in the history of Sensex, which means from 1979 till 2020, this was the 7th instance where Sensex has fallen by 30% or more. 7th time. So this is not the first time.
Oh.
Number two, the previous fall in 1992, the fall happened in even lesser number of days. Okay, so this is again not the fastest fall. Having said that, it's still shocking. So this is part one. This is part one of the answer. The stock markets have really not reacted that negatively. Number two, have there been instances of long period negative returns? So 3 years is a reasonably short period in the equity market cycles. But there have been instances, just go back to our own markets, Indian equity markets. And 1992, on 22nd April, Sensex closed at 4,200 something points. Yeah, 4,500 points, something of that. 4467. Okay. I recollect the exact number. 4467 was the closing value of Sensex on 22nd April 1992. And 11 years later, 28th May 2003, Sensex closed at 2,900 points.
2003, you're talking 9 years later.
11 years later.
11 years.
Yeah.
Oh,
11 years. 11 years in 1 month. And Sensex was lower to the extent of 25%. 4,500 to, so whatever, 1/3. 4,500 to 3,000. Now that has happened in the past. does it mean that these things can continue to happen? Well, these are rare instances that over such a long period in a growing economy, equity markets have delivered such poor returns. So while this can happen, if the economy continues to grow, which is where the doubts are right now.
Correct.
Will the economy grow? Will the economy bounce back? My sense is lockdown is a very strange situation. Not seen. Last time a lockdown was imposed was during the Spanish flu time, which was a century back. And if you simply look at the total world population during Spanish flu, today more number of people have locked themselves down compared to the total population that the world had at that point in time. So this is part one. Has it happened earlier? Yeah, it has happened. So equity is behaving naturally. It's not unnatural for equity to behave in this manner. Number two, the other day there was a discussion with somebody, and one guy said, my faith in equity is lost. I'm losing that faith in equity markets.
That's many people's mind wise.
Many people are thinking in that manner. No, my faith in equity got restored in March. Okay, I mean, and it strange as it may sound, from January 2010 till December 2019, which is a 10-year period. During that 10-year period, there were only 3 days. Only 3 days in more than 2,500 days on which the stock markets were open. On 3 days, the Sensex movement was more than 4%, daily movement. Only on 3 days. And in the month of March, there were 10 days in 1 month. Now, equity is supposed to be volatile. For 10 years, the volatility had disappeared. Now it has returned. So my faith in equity has returned. Okay, equity is behaving very naturally.
Really?
It's like you don't really want a Virender Sehwag to bat at the rate of 2 runs per over in a 50-over match. I mean, then you feel that there's something wrong. Okay. So yes, so that's the part as far as the nature of equity markets is concerned. Now, why people's trust is gone is because we only look at one side of investments, which is the returns. And whenever the returns are high, we feel that, okay, this is good. When the returns are low, we feel it's bad. The fact of the matter is returns are good, returns are bad. These are cycles. And so long as the asset class is true to the nature, then you should trust that asset class.
True to its nature of being volatile.
Yeah, it is supposed to be volatile, and it is volatile. Now, if bank fixed deposits start behaving this manner, then I would be very, very upset.
Yeah.
But if equity does not behave this way, then I would be upset.
Fair enough. Okay. So you're saying keep the trust.
Keep the trust, and the trust is this is risky asset class, and that risk must be visible.
The risk
must be visible, because if you can't see the risk, it only means that you can't see the risk. It does not mean that the risk does not exist.
Okay. So then you're blinded. So that's not.
Yes. Or either you are blinded or there is some deceptive behavior.
Okay.
Yeah.
Okay. So you keep the trust, ignore the 10-year returns showing 7-8%. There have been worse times. And markets have, what markets did after the 2003, whatever you were talking about, 2011.
Yes.
Right? After
So
that.
exactly. Every time after a long period of poor performance, the subsequent period has generally been better. And at the same time, like today, it's the birth anniversary of Gurudev Rabindranath Tagore, and in one of his poems he had said, "It is always darkest before the dawn."
Yeah.
And he says, "Faith is that bird which sings when the dawn is still dark."